With over 4 million subscribers, Stephan has established himself as the king of finance YouTube. I enjoy Graham's content and have actually been watching him since he was below 20,000 subscribers. Unfortunately, in a recent video that currently has around 150,000 views, Graham tried to explain how much money you need to invest in order to be able to live off of dividend stocks. Let's go ahead and run the clip.
But as far as how much you need to live entirely off the dividends, here's the entire calculation. To begin, it all comes down to how much do you need? But since the average retiree spends $50,000 a year, we'll go with that as our baseline. The second, when it comes to dividends, you don't necessarily want to go for the stock that just pays the highest yield. After all, you want consistency. So as you can see, these dividend aristocrats tend to pay anywhere between 0.3% at the lowest to 5.3% at the highest, with most somewhere between 2 and 3%. That means if you took a basket of these stocks at an average of a 3% yield, you would need $1,670,000 invested to replace the average $50,000 a year income.
So to summarize, Graham believes that in order to receive $50,000 a year in dividend income, you'd need to invest $1,670,000. That is a massive amount you would have to invest in order to be able to live off of dividends, and unfortunately for many, it's probably not achievable. But there is good news. Graham is completely wrong about how much you need to invest to be able to live off of dividends. Let's break down the math. Graham believes that we would need $50,000 a year to live off of dividend income, which comes out to $4,166.67 a month. If we come over here, you can see we're using the popular dividend ETF SCHD as an example. It's currently trading at around $70 per share with a dividend yield around 3.5%. So with some quick math, this is how Graham would calculate how much we need to live off of dividend income. He would take this number, $50,000 a year, and divide it by the dividend yield and hit enter, and Graham would tell you that we need $1.42 million to live off of dividend income. But again, this is wrong for a couple of different reasons. The main two reasons have to do with dividend growth and dividend reinvestment. Let's go ahead and look at both of these factors. Dividend growth is when a stock continues to increase the amount it pays in dividends over time. For example, in 2013, Broadcom had a dividend yield of just 2%, paying out 19 cents per share every single quarter. Jump forward to today, and Broadcom is now paying $4.60 per share quarterly. This means that if you bought Broadcom in 2013, your yield on cost would be 54%. That's the equivalent of making a $1,000 investment and receiving $540 in dividends every single year. Now let's look at dividend reinvestment. The idea behind dividend reinvestment is simple. Whenever you receive a dividend payment, you reinvest it back into the dividend stock that you own. Let's say I invest $1,000 into a dividend stock that has a 5% dividend yield. When I receive that $50 dividend payment, I reinvest it back into the dividend stock, meaning I now have $1,050 of that stock. Now that I own $1,050 worth of stock, at a 5% dividend yield, my next dividend payment would be $52.50, a slight increase. Combine these two strategies and you get what is known as the dividend snowball effect. When you invest into a stock that continues to increase their dividend payments over time while simultaneously reinvesting your dividend payments, you create a continuous compounding effect that allows you to live off of dividend payments at a much faster rate than many realize. Let's look at an example of this snowball effect and find out how much we actually need to be able to live off of dividends. If you'd like to be able to download the sheet used in this example, then you can head over to my Patreon page at the link in the description. Again, in this example, you can see our monthly cost of living is sitting at $4,166.67, but we also need to take into account inflation, which Graham fails to do. So let's go ahead and stay with the historical average of 2%. So we can see over a 30-year time period, this black line represents our cost of living, and you can see it steadily growing over time due to inflation. And at the end of our 30-year period, we would need over $7,500 to be able to live off of dividends, and obviously at the beginning, we need around $4,167. So let's go ahead and jump into my back test that I've created. For this example, again, let's go ahead and use SCHD, which has had a really good decade. It's averaged 11% price growth rate and 12% dividend growth rate. But even then, let's be conservative with our assumptions. You can see we're assuming a price growth rate of 7%, a dividend growth rate of 9%, and let's stay consistent and assume a starting dividend yield of 3.5%. Now, in this scenario, let's assume we're going to make monthly contributions, since obviously 99% of people watching this video don't have over $1.4 million to go ahead and invest. So in this scenario, we'll assume $1,000 monthly contributions, and we'll project out what our portfolio and dividend income will look like over the next 30 years. So let's go ahead and jump over to our analysis, and here you can see this black line is our monthly cost of living and the purple line represents our investment into SCHD. Right around here, our purple line surpasses our black line, meaning we can then live off of dividend income. But the big question is, how long did this take and how much did we have to invest over that time period to be able to live off of dividends? We'll come over here to my analysis and we want to find out at what point we can live off of dividends. So I'll start to scroll down and you can see after 5 years we can't, 10 years we can't, 15 years we can't, but at around year 23, you can see we can begin to live off of dividend income because our monthly dividend payments surpasses our monthly cost of living. But here's what's really crazy about this. Over that time period, our total contributions would have only been $280,000, far less than the 1.4 or 1.6 million that Graham suggests we would have to invest. Not to mention, only 23 years to be able to live off of dividend income is pretty fast when you consider the fact that most people will never achieve this feat. Graham also argues that there is another way to live off of dividends, one that has been growing in popularity over the past couple of years.
But I will say that if you're impatient like I am, there are a few other alternatives that could get you there a lot faster. One method I've seen floating around a lot lately is what's called a covered call ETF, like JEPI, which generates income through a combination of selling options and investing in US large cap stocks. How much income can you make through this? Well, try 10.7%. Hypothetically, you would be able to replace a $50,000 a year income by investing $500,000.
Graham points out that covered call ETFs like JEPI are currently yielding around 12%. Even then, we can see from our previous financial model that you can still live off of dividends faster by utilizing a dividend growth strategy. Not to mention that if you dig more into JEPI and do your own research, you'll find out that the dividend payouts of the fund fluctuate greatly, and the fund is designed to have a target dividend yield of 5% to 8%, far from the 12% it's currently yielding. Not to mention, the fund will likely not be able to grow its dividends faster than the rate of inflation, meaning that you'll technically be earning less in dividend income year after year. To be fair, Graham does point out that going all in on a fund like JEPI probably isn't wise.
Overall though, just keep in mind that it's probably not a good idea at all to go all in on something like a covered call ETF, since their objective is purely to generate income as soon as possible, and long term you're likely to severely underperform the overall market or end up losing some of your initial capital. So realistically, it'll likely be a lot smarter to take a much more diversified approach if you're going to do this.
I love Graham and will definitely continue to be watching his content, but it's clear there is still a ton of confusion in the investing community on the best and fastest way to live off of dividend income. The math is pretty clear. When you utilize a dividend growth strategy and reinvest dividends, the snowball effect kicks in and allows you to build a massive portfolio while also giving you the ability to live off of dividends in the fastest manner possible. My personal mission is to utilize this strategy to allow me to one day achieve financial freedom by living off of dividends. So if you'd like to join me on this journey, be sure to subscribe to the channel. If you'd like to download the spreadsheet I used in this video, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching and I'll see you next time.